Good morning and thanks so much for joining in. Welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Over the course of the next half an hour, we'll tell you everything that you need to know to start your day on the right note. Let's start with the headlines. The US stock market starts the new year on a negative note with the Nasdaq down about 1.6%, its worst fall since October. Apple is the main culprit. It loses over 3.5% as Barclays downgrades the stock. Asian markets follow suit. Sharp cuts across the board in the Asia-Pacific region. The China A50 and the Hang Seng both lose over 1%. Truckers call off their strike here in India. The disputed penalty clause on the hit-and-run cases will not be implemented for now, according to the Home Ministry. The RBI plans to tighten dividend norms for banks. Only those with net NPAs of less than 6% can pay dividend. And the Supreme Court is set to deliver its judgment in the Adani Hindenburg short-selling case today. All right, let's take you through the latest in global markets first. U.S. stocks started off to a weak, or rather it had a weak start in 2024. The Dow ended flat, but the S&P 500 dropped over 0.5%, and the tech-heavy Nasdaq also declined about 1.6%, the largest fall since October. A large part of that can be attributed to the decline in shares of market heavyweight Apple. Barclays has cut their rating on Apple to underweight, and the price target is dropped to $160 from $161, implying a 17% decline over the next year. In the Asia-Pacific region this morning, the Japanese markets are still shut, but the other two early rises started quite sharply in the red, and that trend has continued into the rest of the Asian markets that have opened as well, with the onshore Chinese markets losing ground, and you also have the Hang Seng that has dropped over 1%. The risk-off trade is also visible in the dollar index, which overnight saw its strongest advance since mid-October. Meanwhile, crude prices are showing signs of softness, despite factors that should ordinarily have led to a rise. Overnight, it came to light that a senior Hamas leader in Beirut had been killed, and both Hamas and Lebanon have blamed Israel, with the Lebanese leader saying that the attack was meant to drag Lebanon into a new phase of confrontation. That's a sign that geopolitical tensions are here to stay, at least in the near term, but even that did not push oil prices higher. As of this morning, Brent crude was trading below the $76 per barrel mark. Now, to put some of these cues into context for the new year, we've got Santosh Rao, the head of research and partner at Manhattan Venture Partners. Thank you so much, Santosh, for taking the time, and Happy New Year to you. What are you taking into the new year, though? Are you seeing that there are going to be signs of a cool-off in equities? The dollar index certainly rising seems to indicate that risk-off sentiment.
Yeah, thanks for having me. Well, I think it's too early to say that. Overall, I would say the net 2024 should be a good year, because a lot of headwinds are kind of fading away gradually. Let's see, I think the Fed is going to cut. We don't know how many. They said roughly 3. They didn't say it, but they kind of implied, but the market is thinking 7. So that's trading on the assumption that the cuts will be big and start early. They didn't say that. So I think there's some disconnect, but overall, there is a sense of optimism for 2024. But I'm in the camp that you have to be cautious. Yes, there's good tailwind. The central banks are willing to come in and reduce rates if needed. Manufacturing is picking up. The lag effects of all the increases are kind of fading. So all that, I think, and the real income is growing. So all these are good tailwind. So a GDP in the mid 2% is reasonable. That's the consensus, and I'm in that camp. So overall, I'm feeling good so far. What you're seeing now today was maybe selling. People held off. They didn't want to sell last year. They're selling now. As it happens in the first few weeks of January, there is a lot of technical reasons that the people sell and buy. But I think as the dust settles, we'll get to see where things are going. And overall, I expect a good 2024.
In the very near term, Santosh, what are the key triggers that you're watching for? So overnight, the manufacturing PMI in the US missed the mark. Is that something that you're watching as a trigger? What are the other factors that you're watching closely?
Well, let's see what the jobs report says on Friday. We want it trending down. Generally, we don't want it to be too heated. Then we have the Joel's report, which is the hiring and laying off, the net effect of hiring. That report comes out, I think, on Thursday. So all these are good labor points, labor market issues that we need to sort out. Inflation will come in a couple of weeks, I'm sure. So I think that also, it's trending in the right direction. We want it to continue. But I think the biggest trigger points I'm looking at are the geopolitical events. We don't want, there are too many cross currents with the Ukrainian-Russian war, the Israeli-Palestinian issue, and so many things going on. So we don't want that to spill over into other areas. Right now, it's not a given. So I think that can have an effect on gas prices and everything else, and it can be inflationary. So there are a lot of triggers there that need to be watched. Let's see whether the earnings estimates will come out. They're generally expected to be around 7 to 8% increase next year. In fact, to 11% for next year. The consensus earnings estimates 11% next year, which can be fine. I mean, let's wait and see. It looks very aggressive. I think it's going to be slightly less than that, based on what the company said in the prior fourth quarter earnings, that things are kind of on the soft side. So. I think my main concern is the inflation continuing going down and the Fed showing its hand in terms of how aggressive it wants to be with the rate cuts. And that we need to wait and see at this point.
Last question. This is a quick one. Sitting in the US and looking out into the emerging markets and particularly India, what are the conversations that are happening right now? Are investors still looking to emerging markets, and how are they viewing India right now?
Yeah, India is a bright spot in the emerging market. That's definitely the case. And then you have an election year coming up, same as in the US and many other countries as well. So I think 2024 is going to be a year of elections, meaningful elections. So I think that always plays favorably into the stock markets because the ruling governments don't want to disrupt anything and want to be favorable. So that will be a good tailwind also. So overall, India, I think it's net positive in terms of outlook and sentiment. And we look at it very favorably. It's a bright spot in the whole emerging market ecosystem.
As well. All right. Thank you so much, Santosh, for joining in and giving us that perspective. Pleasure as always.
Thank you. Yeah.
All right. Let's turn to the Indian equity markets and get you the latest cues from the F&O space. Agam is standing by to tell you just that. Morning, Agam. What are the key cues heading into today?
Right. Well, Alex, so we're possibly looking at a little bit of correction, and maybe not necessarily a sharp correction, but maybe a little bit of consolidation with a negative bias, considering the kind of weakness that we've seen globally and the kind of weakness that we've seen in our own markets yesterday as well. I reckon, if we do start on a weak note, a lot of traders will take that as an opportunity to perhaps at least liquidate their older positions. That's to a certain extent already come through in the last couple of hours of trade yesterday, as you can see unwinding as far as the Nifty futures go, even as the underlying came off by around 0.3%. For the Bank Nifty too, and remember that will be in focus because of the weekly options expiry as well. That's where we've seen fresh shorts coming through, even as the underlying declined by nearly 1% yesterday. A lot of that was seen in the last 1 hour of trade. And remember that the Fin Nifty was only kept in check because of the support provided by the Bajaj Finance twins. That said, in terms of the kind of range that we are looking at least in today's day of trade, well, it would roughly be a 500-point range. Of course, as far as change goes on the Nifty, we are once again looking at a little more writing around lower levels in terms of puts, 21,300, 21,400 on the higher end. We're starting to see a little more activity coming back now from 22,000 to around 21,800, and that also kind of gives you an idea about how things are panning out on the higher end of the spectrum for the Nifty. So we don't have 22,000 any longer as the one with the maximum open interest. That is shifted downwards to around 21,800. That's the upper end of the range that we're playing for tomorrow's weekly options expiry. And on the lower end, of course, we're keeping an eye on 21,500. We also have the Nifty Bank options expiry today. And based on that, we're of course going to see a lot of resistance around 48,000. We're not too far away from that level, but if we do see a start on a weak note, where I reckon a lot of traders are going to take that as an opportunity to go ahead and sell those calls even in today's day of trade. On the lower end, we're likely to see a little bit more resistance around 47,500, 47,600. Let's come down to stocks and talk about how things are panning out there. Again, it was a mixed day of trade, though, and we did see more declines as compared to advances towards the end of the session. But we did see longs building up in Delta Corp, Abbott, and Tata Consumer, and Bata and Eicher Motors were under pressure, so shorts building up there. And besides that, longs unwinding in Dixon Technologies, Balrampur Chini, along with LIC Housing Finance, and ACC and Siemens see about a short covering. But all eyes on financials today, Alex, based on the weekly options expiry.
Thanks so much, Agam, for that. And in fact, another reason why financials might be in focus is the Reserve Bank of India has issued a draft circular on the declaration of dividends by banks, stating eligibility criteria and other requirements under the new proposed norms. Banks' net NPA's ratio or net NPA ratio will be taken into account. And there is a statement that says that beyond 6%, banks will not be allowed to pay a dividend. Now, it must be said that by and large, the NPA ratios for banks have improved very substantially over the last couple of financial years, and very few banks will have high levels of net non-performing assets, but most of them having provided. But then you see on your screen the ratio in which you're allowed, or banks will be allowed to give out dividends based on the kind of net NPAs that they currently have. Now, moving on, a key event to watch today is the fact that the Supreme Court will announce or pronounce its judgment in the Adani Hindenburg case. Among the key issues that the court will be ruling on are the investigation by the SEBI into the short selling of Adani stocks, as well as some regulations governing ultimate beneficial ownership. Varun Gakar is joining in to give us some perspective. Varun, what can you tell us? How can you set this up for us? What are the key factors to watch here?
Hi Alex, good morning. So it's expected that the court is likely to address SEBI's role in the investigative process because it was heavily contended by the petitioners that SEBI has not done a timely job in its investigative role. The court is also expected to come out with its opinion in the whole fiasco, I expect, because since the expert committee came out in March last year, and as per SEBI's last progress report, it has already completed its investigation in 22 out of the 24 matters it had identified. So yeah, we can look forward to these things.
All right. Thanks so much, Varun, for joining in and giving us that perspective. And clearly, of course, this is a disclaimer that I have to give you. NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company. But in case you want to read some of the details ahead of that ruling, you should check out the story on the website ndtvprofit.com. We have to slip into a very quick break. There's more on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Let's focus in on stocks that you should watch out for, and there are quite a few that are likely to be in focus on account of bulk deal alerts that have come in. Radhakishan Damani has bought additional stake in VST Industries. That, in fact, was a stock that a lot of people were focusing in on. While there is a foreign fund that has acquired a stake in Strides Pharma, and Malabar India has bought stake in PDS. To give you all of the details of those key deals, we've got Mahima joining in. Mahima, what can you tell us about the latest here?
Right, Alex. So, like you rightly mentioned, we had 3 bulk deals that took place yesterday. One was VST Industries, where a combined transaction of 151 crore took place, and it was sold by DSP Mutual Fund and HDFC Mutual Fund, where DSP sold 1.61% of its stake and HDFC sold 1.29% of its stake, and it was bought by Radhakishan Damani. He bought 1.44% stake. Radhakishan Damani also holds 30.7% stake already in VST Industries, and the rest was acquired by SBI Mutual Fund. Approximately 1.45% stake was acquired by SBI Mutual Fund. If we talk about the valuation of VST Industries, it is currently trading at PE of 19.86 times. And like you rightly mentioned, the stock hit an upper circuit yesterday and hit a fresh 52-week high of 4,065. Coming to Strides Pharma, Amansa Holding bought 18.17 lakh shares. That is approximately 2% of the holdings. And at present, we don't know who the seller was particularly, but if we talk about the key shareholders, promoters hold approximately 27%, Quant Mutual Fund, Aditya Birla Sun Life hold approximately 5%, and LIC and Route 1 Offshore holds approximately 4%. Then coming to PDS Limited, Malabar India Fund bought approximately 10 lakh shares, which is approximately 0.76%, and PDS is currently trading at a valuation of 47.05 times. And again, here also we don't know who the sellers were exactly. However, the key if we talk about the key shareholders, promoters hold approximately 66%, and then we have Mukul Agrawal, who holds 2.72% already, and Vallabh Bhansali and Inam holds approximately 1.7 and 1.6%. So this is the overall summary of bulk deals that took place yesterday in trade.
Thanks so much, Mahima, for that. Let's talk about stocks to watch, and there are a few to tell you about. Hero MotoCorp on the back of its sales in December. You also have RVNL that has signed a memorandum of understanding with REC, and also at the third stock that we will be focusing on is Arihant Superstructures. To tell you about all of these, Mihika is joining in. Mihika, what are you picking up?
Yes. So first, I would like to talk about Hero MotoCorp. They've released their December sales, where their motorcycle sales unit was 3.54 lakh units, but it was down 1% on a year-on-year basis, whereas the scooter sold stood at 39,294 units, which was a 5% year-on-year growth. Domestic sales, which forms a major part of their revenue mix, was down 1%, whereas the exports was actually up 25% year-on-year. Coming from the Jan to December period, 54.99 lakh units of motorcycles and scooters were sold, which represents a 5% year-on-year sales growth. From the revenue mix perspective, domestic sales were up 4.4%, while exports were down 2.2%. For the near-term outlook, they expect the increased government spending and increased liquidity and encouraging farm activity and marriage season to support growth from fourth quarter onwards. Then we have a Rail Vikas Nigam, which has signed an MOU with REC, which will lead to mutual benefits. RVNL will present bankable projects which will have assured or projected sources of revenue, while REC will explore the scope of financing the projects and have pre-stipulated conditions and returns. RVNL has also received a letter of acceptance from the Southern Railway for a major upgradation and redevelopment of Varkala-Sivagri railway station. The contract period is for 30 months and the contract value is for 123.37 crores. And finally, we have an Arihant Superstructure, which has plotted a new development project in Navi Mumbai, which is spread across 118 acres. The project is acquired partly on a joint venture transaction and partly on an outright basis, and the transaction is expected to be completed in 6 months, and the total development potential of the entire project is 2 million square feet. And with this, the total land bank is set to cross over 355 acres, and the company is focusing on its diversification into the horizontal development segment over the last 1 year, which will increase its offering base in the MMR region.
All right, thanks so much, Mihika, for those details. Hindustan Zinc, MOIL, MOIL and Avenue Supermarts are also going to be stocks that you should watch out for and trade today. And Harsh is joining in to tell you why. Harsh, morning. What can you tell us?
Morning, Alex. Quarterly updates coming through on some of these counters. You're seeing Hindustan Zinc. In terms of the mined metal production, it's at 2.71 lakh tons, which is up 7% year over year. So growth there continues. Refined metal production at 2.6 lakh tons, which is up just about 1%. So largely flat. And silver integrated output at 197 tons, which is up 22% year over year. This is, of course, for Q3 of this financial year. MOIL also came out with its December business update. The December production has come in at 1.85 lakh metric tons, which is up 31% year over year. The April to December sales is now at 11 lakh metric tons, up 40% year over year. So MOIL continues to chug along with regard to growth. Most importantly, Avenue Supermarts came out with its numbers and of course provisional numbers, business update as you call it. Revenue stands at 13,247 crore, which is up 17.2% year over year. The store count has gone up by just about 5 stores this quarter, 17 stores this year, 9 months. And another 23 stores as per guidance is to be added in Q4. Some amount of skepticism on that count as well, whether Avenue will manage to add that in this year given the guidance. And of course, it's a tepid quarter when it comes to your per square foot sale as well as your same store sales growth, which has been absolutely flat. And that's where probably a couple of challenges are at as per Citi. They continue to have a sell rating on the counter with a target price of 3,100.
All right. And Harsh, you've also been tracking a lot of the banking updates that have come in, or the BFSI space, or the quarterly updates. What can you tell us about the latest there?
Well, yes, let me first off on that count start with the Mahindra & Mahindra Financial. That's the pick of the lot. Disbursements at 4,900 crore, which is up 5% for the month of December. The Q3 FY24 disbursements stand at 15,500 crore, which is up 7%, mind you, on a higher base, of course. And what Citi therefore believes on this count is that M&M Financial will clock a growth of 4% sequential, 27% year over year for this quarter, if their math is correct. Now, collection efficiency has improved month over month from the 94% mark in November. It's come in at 98%. That's definitely a positive, but more expected with regard to collection efficiency improvement going forward. The gross stage 2 as well as stage 3 largely flat. Stage 3 has improved a little bit. So your asset quality has gotten better, and that is how the cycle is playing out as well. Quickly on to Yes Bank, loan book growth of 12%. With regard to Yes Bank, deposit growth of 13%. In fact, one of the very few banks where deposit growth has actually outstripped loan growth in this kind of an environment. CSB, loan book growth 22.5% year over year. Very, very small book in comparative terms. Deposits up 21% year over year. Bank of Maharashtra too, you're looking at advances growth of 20% and deposit growth of 18%. So deposits lagging advances, that's been the theme within the banking and financial SPAC.
All right, thanks so much, Harsh, for bringing us those details. Coal India is going to be in focus. The company, through a filing, has informed that it supplied an all-time high volume of 98 million tons to non-regulated sector consumers till December of this current financial year. We've got Himansh to tell you more about why that is significant. Himansh, morning. What can you tell us?
Good morning, Alex. Coal India has been on a dream run of sorts with the power supplies as well as the power demand that have both been, running up in the midst of this winter season that we are in. The supplies of 98 million tons have exceeded their projected equipment as well as their projected numbers that they had at initial beginning of this year. This also marks a growth of 31% over the past year, as well as Coal India's offtake numbers that were reported a couple of days ago to power plants also show a significant uptick from the period of April to December. Now, what's been working for Coal India so far, because we've also seen a slew of brokerages come in with their upgrades for this counter. Well, firstly, the growing power demand and the non-power segment as well that they've been working towards. The capex boost, which has increased significantly. For comparison, in FY20, Coal India had a capex budget of about 6,500 to 8,500 odd crores. For this FY, as of FY23, they had budgeted 18,600 crores for capex. In terms of valuations, you're seeing they have contracted over the past few years. While at 2011 to 18, while it was trading at around 13 times its multiples, you had in 2019 to 2023, it became cheaper on account of ESG concerns to about 6.5. Then lastly, you have global versus domestic trends playing out, where you're seeing global prices in coal, global coal prices rising. So there's a bit of a catch-up that's been playing out there. And lastly, the renewable energy sector capacity is also something that Coal India is focusing towards and has, a robust pipeline of about 2,500 megawatts in FY24, as well as already added, has been awarded capacity of about 770 odd megawatts this fiscal as well. If I were to, brokerages have set a target price anywhere from 435 to 450 from ICICI Securities, Jefferies and Motilal Oswal that have recently upgraded the counter to a buy.
All right. Thanks so much, Hemant, for bringing us those details. And finally, there's an update on the truckers' strike. The countrywide truckers' protest has been called off as the government assured that it would consult stakeholders before implementing the contentious law against hit-and-run cases. After long talks with the government, the All India Motor Transport Congress called off the agitation. The protest was over a section of the proposed new penal code, which, by the way, has been passed and is yet to be implemented, which had provisions for strict penalty in hit-and-run cases. The protests were called off after Union Home Secretary Ajay Bhalla said that discussions would be held with the All India Motor Transport Congress before a decision is made on the inclusion of the provisions on hit-and-run cases. And that brings us to the end of this edition of All You Need to Know. But as always, there's lots more to tell you about before the start of trade. You'll find all of that action right here. This is NDTV Profit.